I'm here with my buddy Jack. We're in Tulum. We got the trading set up, and I wanted to go ahead and just give you guys this quick little intro, and then we're gonna jump on the chart. So one thing that I wanted to talk about is understanding, oh, it's loud out there, is understanding how to actually make your trading style work with your current style. So for some of you guys that are working full-time, or maybe you have a job where you're working early in the morning during New York session, maybe you're working late at night and you can't necessarily trade those sessions with volatility, you're probably best off looking at monthly, weekly, daily zones and transitioning to a swing trading style. If you're a person that works from home and you're on your laptop and you can trade those sessions with volatility, you can go ahead and focus on intraday trading. So with that being said, make sure that you have the right schedule to fit your trading style and vice versa. So let's go ahead and jump to the charts right now and look at a setup that we covered last week on Euro USD.
Hey, it's Nick with Better Trading. I want to go ahead and share with you one simple strategy you can use with smart candles to find really great opportunities with really good risk to reward. So these opportunities are going to stem from your higher time frames, your daily and your weekly time frames. You're going to go ahead and be looking at levels that are either key levels where we have price react as support and resistance. Maybe they're going to be supply or demand areas where we had strong areas where price was strongly rejected and sellers flooded in, and the reverse for demand. Or it could just be something like this where we actually have market structure on a higher time frame and you get a nice retracement level, and you can go ahead and look at your smart candle notifications in those levels. So let's go ahead and start off with Euro USD. This is a setup that we covered about a week and a half ago, 2 weeks ago on Euro USD. So I'm gonna go ahead and turn this on. And we can see if we have the normal candlesticks. Here was the last sell notification, okay? Now, if you know how to do a multi-time frame analysis, do it. Find your zones and go down to a lower time frame. I'm gonna show an example with the 4-hour market, 4-hour structure, 4-hour price action. So we're gonna go ahead and switch these to ashy candlesticks. We can actually see that the sell notification was at this point. The ashy candlesticks will merge the two previous candlesticks together and actually just give you less notifications. You'll have less notifications, less noise, like we just heard right there. And basically, you can use this in combination with your higher time frame zones. So for example, right here, we had from swing high to swing low. We'll go to the daily time frame, and we can actually see that this was a daily setup where we actually had price move into this 61.8, 1.18500, right? We got rejected there. We opened up last week. In this area, we had a lower high form. We had a sell notification go off. Like I said, you can use lower time frames than this, but if you're new to trading, this is a really simple way to look at the charts, and you can find setups that have a nice risk to reward. So we would have entered somewhere around this point here, and we would have been targeting the daily low. That would be an ideal target, right? If you see that the market's clearly running into another area that's significant, maybe before that, you could definitely secure some profit. But if we just look at that and we go ahead and put our stops above structure, targeting that next low on the daily time frame, we basically have a 1 to 2.3 risk to reward, right? You don't want to target all the way at the bottom, but a little bit above that low. So it's going to be about a 1 to 2.3, 2.4 risk to reward, and that's with a healthy stop loss, right? If you go ahead and look at structure lower and you understand how to find these zones, you could definitely do that. So let's look at one more setup. This was another setup that we talked about on the webinar about a week and a half ago, 2 weeks ago. So we had AUD CAD on the higher time frames. We were getting rejected at a monthly level. We had a shift in structure on the daily. We actually broke structure, printed a lower low, lower high, lower low. We were waiting for this next lower high to form, which we had form towards the end of last week. And we can actually see shifts in structure on the lower time frame. But for this concept here, we can actually see here's the ashy candlesticks. Here's the sell notification that went off. And we can see, stops above structure, targeting the next daily low. We have a nice risk reward about 1 to 2.7, 1 to 2.5, right? Now, if you understand how to do a multi-time frame analysis, you can actually go ahead and you know, look at this shift in structure here. Lower low, lower high. So here's opportunity 1 in this zone, opportunity 2 in this zone, opportunity 3 right here as well. So again, for this strategy right here, if you're brand new, you can use the ASHI candlesticks. You can find these daily and weekly levels that have had strong rejection. Wait for that notification and keep an eye out for an update. We're releasing an update later this week where we're actually going to start showing you guys, I'm not sure what the exact name is going to be, but we'll probably call them smart dots. It's basically going to be oversold and overbought areas. They'll start to pop up as a warning. So keep an eye out for that. With that, this is Nick with Better Trading, and I'll see you in the next segment.